Hi, my name's Barrie Crampton. Welcome to another episode of Not the Evangelist News. Couple of things again in the news totally contradict what you hear the evangelists saying. And to be honest, some of them totally contradict what you see, the stories in the rest of the magazine. So you need to figure that one out for yourself. But let me go to the first story. BVRLA warns of coming EV residual value storm. Now, again, you'll see everybody saying that the Baldy and Doyle at the Climate Intelligence Unit, the ZEV mandate's working. Dr. Andy Pandy, ZEV mandate's working. The other guy, Jan Rouse, and all the usual suspects, the ZEV mandate's working. Is it really? Or are you just too stupid to live? Because I think it's the second thing. I'm still trying not to get wound up this year. I'm doing all right so far. So, leasing companies are staring at the horizon and not liking what they see, according to the British Vehicle Rental and Leasing Association, BVRLA. Well, as I've said in previous blogs, the leasing companies have been parasites to the motor trade for as long as I can remember. They've destroyed the motor trade profit. They've interrupted deals. That's the idea. They interrupt the customers here, the car dealer's here, customer goes, test drives the car, agrees a deal, and then the leasing companies step in and say, hello, Mr. Customer, let us supply the car. We'll screw the dealer down on discount because we buy so many. We'll lease it to you cheaper than they can lease it to you, but if anything goes wrong, forget my number. If it needs repairing, anything goes wrong, don't be ringing me, because I don't do that shit. Ring the dealer, take it back to him, give him all the problems. He's got this big showroom, and he's got all these millions of pounds worth of tools. All I've got, Mr. Customer, is a computer and a telephone. That's why I can do it cheaper than they can. So that's it. So they've been parasites. It's difficult for me. It's difficult for me to feel sorry for them. I never want to see anybody, no matter who it is, losing their job. But they would see the motor trade on their backside. They would see them in the gutter. It's just karma, really. It is karma. Because they've got all these EVs out on hire, they've mucked them all away, they've undercut the dealers, they've got all these EVs out, they've screwed them into the ground because the dealers have had to get rid of these cars to make room for more stock and the bigger targets. So they've screwed them into the ground, they've put them out on lease. Now, when they come back off lease, the idea is they're actually worth more than they stand at. Obviously, that's how they make a profit. They take payments off the customer, they make a little bit, but they've given they forecast a residual value. If that forecast is wrong and it's less, then apparently on average they've been losing, I think, £2,400 an EV. Every EV. They've been trying their damnedest to get people to extend the contracts so they don't have to realise the loss on the books. They played out every trick under the sun to extend contracts and so on. It says that there's a named storm coming, and its name is electric vehicle residual values. I could have told them, well, I did tell them this years ago. I knew what would happen. It was obvious what was going to happen. Not to the experts, just to old hands of the motor trade like me, old dinosaurs, old fuds, what else? Stuck in the ways, futures pass them by, all those people like that, all the proper people, they could see it coming. But all the pointy-shoed white socks, no socks, shiny suits, they couldn't see it coming because they're experts. So far, leasing firms have been able to weather the impact. Now, please listen to this. Especially all you evangelists, especially you people who are saying that EVs are selling like hotcakes. Listen to this. and especially you experts who say that EV prices have stabilised and are going up, and they're selling like hotcakes. You need to listen to this next bit. So far, leasing firms have been able to weather the impact of the 60% decline in used EV prices since 2022 by offsetting the disposal losses with the proceeds of healthy prices for end-of-contract petrol and diesel vehicles. Electric vehicles were worth less than they forecast. Petrol and diesels were worth more. So with the money they've made on the petrol and diesels, they've been able to offset some of the losses of the electric cars. Petrol and diesel have saved the EV market. Petrol and diesel have bailed them out. Petrol and diesel have stopped these firms closing. Petrol and diesel have stopped firms shutting right, left and centre. They've stopped manufacturers closing. They've stopped manufacturers closing factories. Petrol and diesel. You know, dinosaur juice, diesels, all that stuff. They've saved your butt. All your stupid EVs, all your stupid claims that EVs are cheap to charge, cheap to run. They're not. Leasing companies can't even run them. They don't even drive them. They don't charge them. They don't do anything. All they do is nick them off the main dealer, pinch them for cost. Then they put them out to the customer who pays monthly, and then after 3 years, gives it them back. They stick it in an auction and they lose on average 2,400 quid. Same thing with a nice car. Same thing. Do exactly the same thing until it comes to the end. Put them in an auction and they make money. That's how they can afford to lease EVs. If you don't think that's ludicrous, and if you can listen to the crap that these lobbyists come out with, the absolute garbage that they come out with, then you keep saying there's something wrong with me and I'm off my meds. It's not me who's off my meds. It's you. If you think that is correct, there is something wrong with you. Not me. I'm fine. I'm great here. Not on my meds. Not drinking. Just an old guy who's very happy that he's not having to put up with this crap anymore. I just want it to stop. As soon as EVs start selling, the sooner the motor trade will get back on its feet. But it won't sell well. There's people like Colin saying the ZEV mandate's working, and Colin and Andy saying that they're both experts now in car propulsion. They both think that, it's about time they stop experimenting with hydrogen. You can't change the laws of thermodynamics, I think he said. He may well be a clever guy, but I tell you what he's not an expert on. He's not an expert on the motor trade. He hasn't got a clue. He's not got the first clue about it. He doesn't know where to start. He should shut up, and so should the Climate Intelligence Unit. Making claims like you could save £2,600 a year on an Audi e-tron when you can't. You can't. It's impossible. The dealers can't even do that. Don't get me started. But the BVRLA says in its latest quarterly report, this has only been possible because EVs constitute barely 10% of their defleeted vehicles. So what they're saying is the 90% ICE cars have managed to save them. Just imagine if it had been 90% EVs. Now that's only 10%, 10% of their defleeted vehicles. The ZEV mandate this year was 22%, or last year was 22%. This year it's going to be 28%. So if they do their target and the same continues next year, it's just going to be Carmageddon. Looking ahead, EVs now represent 37% of BVRLA members' total lease fleet and 44% of new additions, with some companies already well above the 50% threshold. The concentration of EV residual value risk in the business contract hire and salary sacrifice sectors is extreme, argues the BVRLA, with leasing companies keen to see private motorists account for a greater share of the new EV market. They want the private motorists to share the load. They want the private motorists to take the burden. They want to lay off some of the risk to the private motorist. They don't want risk because they want to make money. So what they want is the private motorists, i.e. guys like me on a pension, to go and sink all the life savings into buying an EV to bring up the residuals. That's what they want them to do. So they can continue being a leech or a thorn in the motor trade side. That's what they want to do. Auto Trader, every single page on Auto Trader now, there is at least one advert for their leasing companies. That's what they wanted to do. That's why they bought Autorama. They wanted to lease electric vehicles. That was their unique selling point. All gone wrong. The concentration of EV residual value risk in the business contract hire and salary sacrifice sectors is extreme, argues the BVRLA, with leasing companies keen to see private motorists account for a greater share of the new EV market. The average CO2 emissions of the BVRLA members' total leasing fleet continues to tumble, but the disparity in EV adoption rates between business and private drivers is illustrated when those figures are broken down. Average emissions of new personal contract hire cars is more than double that of new company cars, 129.7 grams per kilometre versus 61.3 grams per kilometre. Well, private people don't get salary sacrifice, do they? So effectively, and benefit in kind, they don't get any of that. So why would they buy that when they know damn well if they buy a petrol or diesel, it's not going to depreciate as fast and it's going to cost them less money to run? They're not stupid. They're not stupid like the lobbyists. They can use the brain. Nobody's paying them to say stuff that isn't true. No green energy company is coming around to pensioners' houses and saying, listen, mate, can you do us a favour? Can you try and big up EVs? Can you make stuff up? Can you say that, whenever you see a story in a newspaper, can you try and debunk it or leave out the important bits? Just put in the bits that look good and leave out the important bits. Like, they were saying yesterday about EV sales in Europe are dropping. 3%. 3%. It's only 3%. Well, it's only 3% across the board, but in Germany, they dropped 69% in September. 24% overall. Germany's the biggest EV market, the biggest car market. But no, they won't tell you that. They'll only tell you the 3%. Beyond supply and demand, there are further deflationary pressures on used EV prices, according to the BVRLA. New electric cars and vans boast longer ranges and better technology, increasing the risk of rendering current models obsolete, it says. New entrant manufacturers are offering lower-priced models, while legacy OEMs are trying to stimulate the market to hit their ZEV mandate targets by deploying discounts that are so large they are destabilising residual values, claims the BVRLA, creating a vicious circle whereby they need to keep increasing discounts to offset ever weaker residual values. The Society of Motor Manufacturers and Traders, SMMT, estimates that discounts have cost manufacturers $4 billion across 2024, a figure it says is unsustainable. Well, it's $4.5 billion. Fleet News has also reported how pre-tax profits of the country's top 50 leasing companies in the FN50 reveals an equally troubling outlook, with returns declining by almost a third, 31.6% year on year. The financial stability of leasing companies has become an area of inquiry for some large fleet customers, with one supplier saying that it had won a couple of large lenders in 2024, due in part to the formidable balance sheet of its parent. The BVRLA says that leasing executives are united in their call for government support for used EV buyers in the form of grants or VAT reductions, an equalisation of the VAT rate between home and public charging, and a positive communication campaign to promote EVs and dispel negative myths about battery degradation. In the meantime, they are busy encouraging customers to extend existing EV contracts and developing second life leasing products. Both moves are proving popular with customers keen to minimise their costs, say the BVRLA. That's because they've been caught out once. They're not going to make the same mistake again. So now your new EV lease has gone up. So they know they're going to be covered. Well, people don't want it. They've got an old lease on an EV and it's buttons. So they're going to extend it, aren't they? Sell second BCH offset PCH fall. There was an impressive 6.3% year-on-year increase in business contract hire BCH car numbers, up to more than 867,000 vehicles in 2024. BCH accounts for 60% of the lease fleet and has risen to levels not seen since the first half of 2019, before coronavirus struck. The PCH market, however, has been in almost uninterrupted quarter-on-quarter decline since the first 3 months of 2021, with vehicle price rises, higher interest rates and the cost of living crisis dampening demand. But that's strange, isn't it? Because those things there, it's not dampened ICE vehicles, has it? Because they've made profit on ICE vehicles. So why hasn't it dampened ICE vehicle sales and residuals? The 15.1% year-on-year fall in PCH numbers follows the shrinking volumes in the private new car market, where SMMT data tracked a 9.4% decline between January and September. So it's going to be 12% over the year, isn't it? The stellar performer in the car sector continues to be salary sacrifice. Of course it would. Up 51% year on year, as a new wave of smaller, cheaper electric vehicles and fledgling offers of second-hand EVs are making the environmental employee benefit accessible to lower paid workers. So that's the leasing companies. If you remember, a couple of months ago, the BVRLA came out with this thing, along with Auto Trader and a couple of other EV Angelis. And to say, in fact, I've put it in an old video, and you read through it and it scares you to death. And at that time, everybody was saying EVs are flying off the shelf, EVs are stabilising, values are going up. They weren't. I said they weren't. Get called all the names under the sun. But today, years after I forecast what was going to happen, all come true. Thanks for watching. See you in the next video. Bye-bye.